when you look at specific countries in North Africa and East Africa and Central and West Africa, like we're seeing numbers as high as 60% rates of inflation. So that's not just currency devaluation. That's currency devaluation, that's inflation, that's rising CPI, but that's also lack of availability. Yeah, so the idea is that importers who have issues finding sources of foreign currency to import their raw material can use stable coins to import this raw material. And it's a very effective method, provided that it doesn't break any laws in the jurisdictions they operate in, et cetera, et cetera.
So, Assalamu alaikum and hello everyone. Welcome to another episode of Taka Talks. Today we have with us Ahmed Amer. Is it Amer or Amir?
No, Amer. You said it right.
Amer.
First time.
Good. Yay. Ahmed Amer. Ahmed is a seasoned investor with a global presence across Africa, the US, Europe, MENA, and GCC regions. With a track record of managing about $100 million in private public capital, he has provided strategic guidance to high net worth individuals, family offices, financial institutions, governments, and Fortune 500 companies. Ahmed has been a blockchain enthusiast since 2013, so one of the OGs, driving SaaS and BaaS implementations in digital transformation and fintech. Additionally, he founded GIF. GIF, what does it stand for?
GIF. It's like
GIF.
Yeah. You know what a GIF is? Like
yes.
GIF?
Okay. You will tell us about this later. So additionally, he founded GIF in 2016, achieving remarkable growth through strategic partnerships with Fortune 500s, currently leading EMURGO Africa's $100 million fund. Ahmed focuses on investing in Web2 and Web3 startups in Africa with a keen interest in climate resilience and financial inclusion. So Ahmed, this is the official biography. Tell us the unofficial story.
Investment banker turned startup founder turned venture capitalist. That's basically it. So started my career as an investment banker. Managed to pull through that, after which I started a company, which afterwards was sold, and then I was able to get on the other side of the table and start investing in companies, and then started getting a bit more frontier tech specific, so blockchain, AI, ML, robotics, drone tech. And in lieu of that, was able to invest personal, private, and public money in those areas in emerging markets, and been solely focused more on blockchain investment in the last couple of years.
Very cool. Can you tell us why you are self-described as a blockchain enthusiast?
Number of reasons, really. I believe in crypto. So my foray into blockchain, as with many people, was through crypto. That sort of opened my eyes into the potential of what technology behind crypto itself is capable of doing. So started getting involved with that in areas that without the presence of blockchain would be very difficult to attain or scale or achieve or progress. And my first ever foray into blockchain, not many people know this one, actually. I think this is the first time I share it, but my first foray into blockchain investment was a company in Nicaragua that was using blockchain to develop specific IVR solutions and specific internet connection solutions in very rural areas. It was one of the rainiest places in Nicaragua, and having to deal with constant power outages, and then using blockchain as a means of storing farmers' data such that whenever there's a spike of a small internet connection, the data is transmitted immediately through these mesh networks. So that was my foray into blockchain, actually. It was the first investment I made. And then, never looked back since then.
So you talked about different areas which are now only possible because of the blockchain. So aside from the example you brought up, what other things have been made possible by the blockchain?
We'll be right back after the break.
Tekka Talks brings you stories from around the world that will help you understand how crypto and Islamic finance can change our lives for the better. Subscribe and follow us to keep learning by the blockchain.
So in order to answer this question, I'd say let's take a step back and look at how specific industries and verticals operate in emerging markets and frontier markets alike. So when we look at access to financial services, for instance, access to financial services in developed markets, so US, EU, Asia, penetration is above 60 or 70% at the least, right? But when we look at Africa, especially sub-Saharan Africa, you'll see that just over 35% of the population of sub-Saharan Africa above the age of 14 have access to bank accounts or financial services. And the situation gets a bit more dire. I think in all of Africa, just under 60% of people don't have access to a bank account. So when you think of the traditional sort of legacy infrastructure that already exists in developed markets and that has been able to scale mobile penetration, mobile money accounts, banking penetration, all of that, you'll see that a lot of these legacy institutions don't really exist in a lot of these emerging markets. And so instead of waiting 100 years or waiting forever for things like this to be built in these emerging markets, without the significant public investment required, government backing required, laws required, blockchain has the capacity to enable these 60% of people who don't have access to bank accounts to have access to bank accounts via a plethora of ways. M-Pesa was huge, right? M-Pesa was something that was very leading when it first happened. And that became a use case that was followed in many countries and many continents after that outside of Africa. But that was the first step in sort of increasing the ability of people to have access to financial services through mobile money, right? But then still wasn't enough. And so when you have blockchain come in, it enables people to, it's a similar catalyst to how M-Pesa was a catalyst, right? But with blockchain, I think it's in today's day and age and the really complicated financial and economic markets we live in, having access to financial services via a method of exchange that isn't as volatile as a local currency is really, really key for people who live on $1 a day to be able to sustain themselves, where the value of that $1 a day wouldn't be wiped out because of a sudden devaluation in the local currency.
So this is super interesting, and it's extremely ironic because a lot of people, and I would say probably in the West and the more developed nations, they say, well, crypto is extremely volatile, right? And it's very, very risky. And my response is always that, one Bitcoin is one Bitcoin, one Ether is one Ether. It's only volatile against something like the US dollar. But if you compare it to something like, the Naira or the Egyptian pound, actually crypto is the Egyptian pound is more volatile because it's just been going down in value. What do you say to that?
Yeah, absolutely. I totally agree with that. The other thing I would add to it is the power of the stablecoin. So while the stablecoin is a form of crypto, right? But people who aren't crypto savvy aren't familiar with the presence and prevalence of a concept called a stablecoin, whereby it's a digital currency that's pegged to fiat currency. So USDC, for instance, is pegged to the US dollar. It's a very, very prevalent means of exchange in emerging markets where importers are facing a serious cash crunch and a foreign exchange crunch, right? Where the central banks of these respective countries have created very severe restrictions on access to foreign money. And most of these entities, F&B, plants, steel manufacturers, importers, any of these industries or heavy industries have a really, really big import component in them. And so when a lack of foreign currency avails itself in the country, then these importers have a lot of issues in producing all of these items that they need to produce. Paired with things like currency devaluations and pre-existing inflation rates, then the presence of an undersupply of these products that they produce create a negative equilibrium where the supply significantly decreases and the demand significantly increases, thereby increasing inflation even more than it already has increased, resulting in things like hyperinflation.
We'll be right back after the break.
We believe that the financial system is broken and that our banks and insurance companies don't have our best interests at heart. We've built Techaton to help us get together as a community to save, earn, and access credit. Join us today and discover how you can grow your savings while helping others.
When you look at specific countries in North Africa and East Africa and Central and West Africa, like we're seeing numbers as high as 60% rates of inflation. So that's not just currency devaluation. That's currency devaluation, that's inflation, that's rising CPI, but that's also lack of availability. Yeah, so the idea is that importers who have issues finding sources of foreign currency to import their raw material can use stablecoins to import this raw material. And it's a very effective method, provided that it doesn't break any laws and the jurisdictions they operate in, et cetera, et cetera.
Yeah, very cool. So that actually brings up the question of adoption. So if I hear you correctly, businesses in emerging markets and in Africa, they're starting to adopt crypto as a means of transacting. Is that correct? And how about consumer adoption? Is that also growing?
Consumer adoption very much is growing. We've invested in a couple of startups that enable folks to be able to remit money from their expat living communities to their families back home in Africa. And it's been a very effective method, and especially with respect to undercutting things like transfer fees, just time efficiency. It makes it a lot easier for a lot of folks who want to send money back home to be able to do it in a fast, safe, and effective manner. So it is common, I think, and it is gaining popularity more and more. We're seeing more and more companies doing this emerge and pop up all throughout Africa. But that was a significant sort of innovation when it first started happening. Now it's happening right, left, and center. So we're looking for the next best sort of innovation to happen on the back of that. From an institutional perspective, I think a lot more can be done. And if a lot more is done from an institutional perspective, it'll benefit the economies and the people significantly more, because the price gouging will significantly decrease, the availability of products will increase. So yeah, I think both are happening in parallel.
Yeah. I want to touch on what you just mentioned regarding institution, or I would say company, needing the US dollars to make research. When I was in Dubai a few years back, the African actually, they used to come, business tradesmen, they used to come to the souk and buy in bulk, the items from Dubai. And the biggest issue was, paying in dollars. So they have the currency back home. Usually, some of them stay back home and they order to a local guy, usually from the main country, and they ask them to pay in dollars. So they will pay them in their country with the local currency, and they get the money instantly in US dollars there. And that's applied to a lot of tradesmen, businessmen, where they kind of have a man on the ground being able to switch currency directly. Now, what you're saying with the stable coin, you don't need these things anymore. You could just basically have stable coin in Kenya or Nigeria or Algeria, whatever, and directly pay the UAE entity for the goods in stable coin, and they will accept it, and you will bypass all this headache of having a third party getting involved, because usually they take commission and all these kind of things. Is that the use case that you see happening a lot?
That's correct. Yeah, it cuts out the middleman for sure. Of course, the exchanges make a very small commission compared to the exchange of the middleman, and the middleman sort of arrangement isn't a very safe one. There's, as you I'm sure have heard, or you probably know some people who've been in precarious situations, as many of us do, but it's a very sort of word of mouth, trust-based, and you never know. So the emergence of a stable coin really helps significantly with offloading a lot of this concern and risk associated, especially when legally it is prevalent and it is allowed. We're seeing, you mentioned Dubai, we're seeing how the UAE as a whole, both DMCC in Dubai and ADGM are both moving at a light years pace with a lot of the crypto regulation, the off-ramp, on-ramp regulation, the exchanges. VARA's very active and constantly coming up with new regulations and laws to really be clear on how folks in that space can operate. So Dubai and the UAE as a whole is definitely a trailblazer in that respect. And we've actually invested in one of the big exchanges in the UAE, and it's fascinating the work that's being done there, and the laws that are being sort of approved and moving fast in order to make the country a hub for a lot of the work that's being done in that space.
A follow-on question regarding on the ground, northern nation, definitely they have access to banking system, they have access to cash if they wanted to exchange the currency to whatever other currency. People, like you said, they are bank, most of them in the Western world or even in GCC. My question to you, you've been on the ground in Africa, in so many countries. I wonder why, the type of technology that uplift the population and eventually the nation itself is still like hesitant or slow into adopting this kind of payment that would put them on the map the next day, basically. If imagine, if they adopt this technology, they will not only be on the map, they will be dominating even this the world economy by adapting to this technology. It's a big advantage for leaders in those nations to adopt quickly into enabling the population to be on it. What's the blocker? What's the issue on that?
Yeah, that's a good question, Murad. The hesitation is three or fourfold. One is the approach where folks who come from the crypto world or the blockchain world are very, very keen on things being that and only that. while on the other side, folks coming from the traditional finance world in decision-making sort of seats also want things to be TradFi and this and only that. So there's a gap in the middle between sort of both directions. And the way things have worked in other nations and other economies is when these two directions come together and integrate what they do best with each other. And that takes a very long time due to a number of reasons. One, governments take a very long time to sort of segue into new means and new methods of doing things. They've invested so much money in the legacy infrastructure, tools, and systems that they use. Whether these legacy live up to the legacy of others or not is not really the question here, but the question is that it's very hard to turn a big ship around, and that takes a lot of time. The second reason is that in TradFi, specifically within government, they don't really understand this technology. And there's a huge fear of what it stands for because it was always marketed as this volatile crypto that goes up and comes down and makes the poor rich and the rich poor, and comes with a lot of really negative connotations. We've seen in a lot of countries people get thrown in jail and people get penalized for dealing with this after it was, marked as illegal and haram in some countries, actually. So the government has really tried to use every weapon at its means to be able to deter people from getting into the crypto/blockchain world, but it's proving to be an actual one that can be helpful for a lot of these nations. So I think education is a really, really big part of it. And we spend a lot of time at EMURGO working on this education piece and meeting with decision makers and sovereigns and help them understand the value that something like this can actually bring to their economy. Using some of the examples we discussed, like the trade we mentioned earlier. I mean, that's crucial for a lot of emerging economies. And, macroeconomically, things are not expected to get better next year. I'm not speaking crypto, I'm speaking just from a general economic, global macroeconomic standpoint. So the reason and the need for solutions and innovative, novel ways to tackle today's issues are really, really needed. The third sort of under point is incentives. If I'm a founder, a startup founder, and I'm trying to sell an idea to a group of investors or to a business, there needs to be some sort of incentive, right? Governments don't see any incentive in using any of these solutions. On the contrary, there's fear associated with it because there's no clarity, there's no control, there's no transparency in terms of who owns what. They fear the idea of money laundering. They fear the idea of terrorist finance. They fear the idea of a lot of these things. So someone just needs to explain that actually in crypto exchanges, KYC is really, really stern. It's not like anyone can off-ramp and on-ramp any amount of money they want. On the contrary, there are checklists, there are terrorist lists. It's like opening a bank account. It's not any different. But yeah, I think crypto and blockchain overall just get a really bad rep, and it's our sort of responsibility to fix that and incentivize them. In Kenya, for instance, the government has been thinking of instating a tax on capital gains on crypto. Right. Of course, that's met with a lot of concern and fear, but that's also been discussed in the U.S. Right. So whether we like it or not, we can't be entirely archaic and want to operate outside of the confines of the entire financial system. Because if we want to be a part of the financial system, we got to work with them.
So you are a VC, essentially, that is Web 2, Web 3 in Africa. What is different about Africa in general when it comes to VC investments? And then the follow-up to that is, what is specifically different about investing in the Web3 space, blockchain crypto, in Africa?
A lot. So we are the investment and commercial arm of the Cardano chain. And our MO is to help with blockchain adoption, primarily via Cardano, of course. And we do this through a number of ways. We are a strategic investor, so we look at existing Web3 companies who are looking to build new solutions on Cardano, and we heavily support with that. And we also look at Web2 companies who have the potential to have a lot more impact if they migrate to Web3. So these are things like revenue-based financing, embedded finance, payments, SME lending, climate finance, areas like that we have a lot of interest in. We've also launched a lab that we're going to announce very soon. EMURGO Labs is going to be focused on developing solutions for Web 2 to Web 3 and Web 3 folks, solutions for the developer community, solutions for the business community, in order for them to be able to essentially increase their bottom line using blockchain technologies. So we're going to be launching this very soon to help the ecosystem. Now, what we see, or the reason why we're in Africa in the first place is because we didn't see anyone doing the work we were doing in Africa. It was almost like Africa was forgotten from the Web3 space. And so we saw a really, really great opportunity to create the utmost impact while making pretty good returns. So we started investing about a year and a half ago. And to date, we've made north of 60 investments across a variety of industries.
Wait, 60 or 16? 16 or 60?
Oh, 60.
Wow.
Yeah. So we've been very, very active. We've invested in North, East, West, Central, and South Africa. It's very interesting seeing what's happened in Africa in the last 10 years in the startup landscape. We've had so many of these unicorn exits that have happened, or sizable exits, from Flutterwave to Kareem to many others, whereby a lot of folks who came out of those exits, who were the first 100 employees in these companies, it just created a domino entrepreneur effect. And folks started, creating these new entities and new startups to address challenges that they saw. And we're seeing second and third time founders continuing to build things in specific areas. So Web3 startups were pretty slim and earlier on, but as of the last, I would say, 2 to 3 years, we've seen a huge uptick in Web3 founders, and simply a reason is this, the current state of things. There's a saying in Arabic, Murad, that you might know. It's an Egyptian saying actually, and it goes like al-haja al-ikhtira, meaning that the need is what creates the solution. And so when you have currencies losing 60% of their value,
Yes.
Inflation rates at double digits, lack of foreign capital, lack of ability for folks to save their money, for folks to send or receive money, people start thinking of solutions to these issues. And most, if not all, of the solutions we've invested in are all homegrown. So they're all local founders who've seen local issues and developed local solutions to address them. And that's why Web3 has been extremely effective in Africa, and it's almost like it's actually sort of made for Africa, because it really addresses solutions at the core. In more developed nations, we see Web3 as process improvement. But in Africa, it's not process improvement. It's process creation from scratch.
So I see that a lot actually with a lot of Egyptian actually friend of mine, who, or even people who are working sometime with us, trying to find ways to get paid in crypto. But yeah, they are facing some issue. Let's say they want to hold dollars, or they want to go. So they're going on the street literally to some exchange and get the money, the Egyptian pound into dollars. The needs of getting into this technology and crypto, because of the fact that currency is going down and people are finding a way to hedge against this type of issue, and we see this happening in Egypt at a certain level, even though it's very highly checked, highly regulated by the government. But still, some of the people, because of the fact that they are losing a lot in terms of inflation, they're starting to ask to get paid in either a stable coin, USDC, USDT, and even some crypto in order to hedge against the falling of their own local currency. So yeah, I echo what you're saying.
Yeah, so I did want to ask you a follow-up question on investing in Africa in general. So I think the best entrepreneurs are what I call the hungry entrepreneurs, right? Either you're hungry metaphorically, meaning you really want to, you're very ambitious and you want a great success, or you're literally hungry, meaning you are trying to solve a need and there's a problem. Or and so I think those kinds of entrepreneurs are the best entrepreneurs, and they tend to come out from emerging countries, and they tend to come out from places like Africa, right? Because there are a lot of needs there and people are hungry there. But the problem is it's still a very murky environment for investors. There's still a huge trust issue. Even in Southeast Asia, by the way, where I'm from, there's still a huge trust issue, and entrepreneurs do sometimes run off with the money somehow, or they go and they do something which is not what they're supposed to do. Is this true? In your experience, have you seen things like that? And how do you, I guess, overcome this? Oh, and plus there's the issue of, like this is all about financials, right? And we're talking about how money in Africa is a problem generally. So one of the pushbacks that I hear from investors as well is like, if I'm going to go invest in Africa, how can I be sure that I can get my money back out? So there's a problem getting the money in, and then there's a problem getting the money out.
Yeah, I think 9 out of 10 people you speak to who've invested in Africa have been stung. It's pretty common. And I'm not talking VC. I'm talking VC. I'm talking almost every asset class. So it's like anywhere else. You have to take your precautions. You have to do your due diligence. We make it a habit to not invest in first-time founders. So in most cases, they're second or third-time founders. Usually, we are introduced or we come across the founders. When we first started, it was through word of mouth. So somebody we know who was invested in them or considering investing in them would connect them to us. And initially, at least, that was the approach. We were very cautious. Now, of course, it's a little bit different. Now we get a lot of inbound. But initially, at least, we were very careful, and we really thought through the folks we were investing in. The issue with investing in Africa is most people don't actually invest in Africa. Again, in the majority of cases, the investment happens in an offshore entity, like a Delaware entity, or any other sort of offshore jurisdiction. But then the issue that remains is on sort of the transparency around how cash is being spent, right? Because at the end of the day, usually the kitchen, the back office, the ops are in Africa somewhere on the ground. So money needs to be moved from those offshore accounts and bank balances to these countries. So we try to keep a sort of a very strict understanding of what exactly is happening, runway, how the cash is being spent. In most cases, the cash is kept in a stable coin or something like that, so that money can be off-ramped into the local fiat currency that's being used in the respective country. So it's usually pretty easy to follow, especially if we recommend specific exchanges that we trust and have used in the past and have good rates and they're trustable, trustworthy. So, the cash management piece, again, anybody can fake anything if they really want to, but it really comes down to a matter of trust. Like anywhere else, we take the same precautions when we invest in a company in Africa as we do when we invested in companies in Europe and Asia, et cetera, et cetera. So we try to minimize any exposure as possible. But on the flip side is if things are managed in a really good manner and the risk and the exposure is minimized, the upside is usually pretty good as compared to other sort of more developed markets.
Very cool. So I have a question now. In around 2016, 2017, and I think also 21 or so, during the bull markets, a lot of entrepreneurs would do ICOs and token offerings as a way to fundraise. And that has gone away largely because of the bear market. And also, I think there's a general sentiment that those are very scammy. So how would you advise an entrepreneur in this space? Should they look at that as an option to fundraise, or should they go to more traditional routes like VC and equity investments?
Well, it depends on the timing you're speaking about, right? So now, if people or founders are looking to raise money 2023 and 2024, it's not an ICO or an IEO market. It's a bear market. The pricing of everything is down. People are weary. So, a lot of the Web3 companies we talk to now are really focused on raising equity rounds in the next, year. But when you start looking at folks who want to sort of start raising money in 2025, that's when the bull market is expected to kick off. So we're also seeing some companies raise money through SAFT agreements for expected IEOs in 2025. So people are hopeful things will change in 2020. Money on token offerings expected in 2025. We just had our annual Cardano Summit. It was in Dubai this year. I was expecting, pretty low energy. However, it was a little bit different. People were hopeful about, the next year. In spite of what might happen, things might really crash. Things might go up and crash a little bit. It's unclear at this point. But if we look at the equity markets, they're not doing too well, and we can expect a reflection of that on crypto markets in the next year. But it's really a mixed bag of both. Folks who really have strong tokenomics and strong convictions and strong partnerships, a track record, are more likely to be much more successful at their IEO than a company that's doing this for the first time, for instance. So it's not really a one size fits all.
So I'm going to flip this around and I'm going to ask you guys as VCs, how do you expect actually to exit from a crypto startup, whether it's a centralized or decentralized financial system? I know because traditional VCs is quite simple, right? The exit is usually an acquisition or some kind of a IPO on the public markets. But with crypto startups, it's not as clear where the exit, especially DeFi startups, where the exit path is.
Yeah. We operate a little bit differently than traditional VCs do. If we're wearing our traditional VC hat, it's the same like you explained. So we exit at some point. But because of the companies we invest in, and because of the lab we've just launched, some of the investments we're making are, like you said, token investments, right? They're not equity investments. And so we really become discerning about some companies we invested in that space because, we might see specific token potential in those companies. And that's why we decide to support them and work very closely with them on launching a token on Cardano. And we facilitate a lot of the technical stuff, a lot of the sort of token making, token development canvas, a lot of the stuff associated with really getting things off the ground. Another area is because we're a strategic investor, and this is what really differentiates us from a lot of Web3 investors. Because we decide to also build alongside some of these founders, we become partners with them on some of these solutions or products or SPVs that we launch. And so we look at the revenues we're actually going to generate from these businesses as well. So a lot of the businesses and companies we decide to invest with or partner with are revenue generating businesses who provide honest returns on the services they provide through a fee, through a spread, you name it. But that's another area where we look at making returns on some of the investments and some of the work we do.
Very interesting. So what areas in Web3 and specifically in Africa excite you guys? What kind of products are you seeing that is very, very interesting and innovative and exciting?
So embedded finance is a very obvious one. It's been happening for a couple of years now in Africa. We've invested a lot in that space, and embedded finance really happens differently depending on who you talk to. But the idea of creating avenues for traditional finance players to invest in SMEs that otherwise would not be able to receive this investment is a very powerful play. And what could make it even more powerful is a DeFi integration. Connecting DeFi to embedded finance is a really, really powerful tool to enable institutional and individual SME lending, which is a really, really untapped market in Africa. You'll see now that demand far outweighs the supply of funds available. So if you talk to any embedded finance lender or any DeFi lender, you'll see that the demand on these funds is huge, but there's a gap between the funds available and the demand on the funds. So enabling those two individuals to connect in a way that's sustainable, that's a win-win for both, is really powerful through blockchain. And that's a very interesting space for a lot of people right now. Another really interesting space for us is climate finance. I think climate finance started becoming a thing a couple of years ago. We've been looking at that space for a long time now. And the issue with climate finance is, the reason why it never took off was because it was not sustainable. It was always backed by grants, always backed by some sort of cushion, right? Add to that the lack of transparency with things relating to monitoring, reporting, and verification of emissions and carbon emissions, methane emissions, all of that stuff. So the presence of blockchain in these things enables transparency, enables clear authentication, and enables a clear flow of capital on how these things are being offset, especially as we're starting to see some regulation around that and banks being required to create ESG compliant products. So that's another area that we're really, really interested in, primarily leveraging blockchain to make climate finance profitable.
Have you guys looked into Islamic finance? Is that an area of interest?
So a climate finance company that we're working very closely with is actually Sharia compliant. So yeah, I mean, Islamic finance is a super interesting area, and it's funny because Islamic finance is a means of finance that a lot of non-Islamic institutions use just because of how efficient and effective it is. So very much so, yeah.
Very cool. Okay, my last question for you is, let's say there's a young entrepreneur who wants to pitch to EMURGO. And as you mentioned, you guys are kind of a CVC type, right? It's a strategic VC. How would you advise this entrepreneur to, first of all, build his business, and second of all, pitch to you?
Yeah. First of all, I would say I would tell this founder to read our State of Web3 in Africa report that we worked with PwC on. Anyone who reads this report would get a really good understanding of how we think and how we operate and what we look for. After reading that, I would suggest that he or she has a very clear challenge, a very clear problem that they want to solve, and a very clear solution to that problem, and how they're planning to solve this issue, whether the business makes sense or not, and then how blockchain can further support that business in achieving that. And then go on our website, EMURGO, reach out to us, and someone from the team is always in touch and always reviewing the pitches and ideas we receive.
Very cool. So I think we will wrap this up now. Ahmed, are people able to reach out to you? I know VCs don't like to give out their info too much because then you have every person in the world reaching out for something. But how would somebody follow you and listen to more of what you have to say?
People can find us, reach out to us on our website, and of course, happy to help as much as we can. So people can connect with me on LinkedIn. I try to be active, so I may not respond to all messages, but I try to be as helpful as I can. So I can be found on LinkedIn, Twitter as well. It's if anybody has any questions on the potential of blockchain from their business, read our State of Web3 in Africa report, and follow us on Twitter, LinkedIn, Facebook, as we're very close to launching EMURGO Labs, and a lot of these resources are going to be very, very helpful for the business and developer community alike looking to scale and or integrate blockchain and their tech stack.
Fantastic. And I think that's a wrap.